looks like we are getting pumped in the price and in the fundamentals as well. And when the news outlets shows a full-blown bull run, be cautious about a disbelief rally. But at the same time, the fundamentals are much stronger than 2017 for XRP, and the footprints of Ripple looks hegemonic in the value exchange area. This time, with the institutions and retail investors getting into the crypto sphere, it will be a mega bull run. But I'll remind you guys this, institutions will try to manipulate and make more profits from the retail investors. So don't be confused when you see different types of price fluctuations. So it's you who have to understand the market and the entire crypto sphere, the price fluctuations and all. Now you have to look your portfolio and your risk tolerance to understand how it is being managed. Price fluctuations along with some indicators allow you to evaluate the opportunity here in the crypto sphere, and the change in the financial markets will allow you to understand how things are changing. Now, as the fundamental side of it is changing, it kind of allows you to stay strong while a carnage is happening even during a bull run. Welcome to the Scientific Investor family, where we discuss crypto and science behind investing regularly. If you saw value in the content, please hit that like button. If you would like to extend your support, you can use the links in the description below for Patreon and PayPal. You can use Patreon link to get more research and standard output for your portfolio. We can discuss your portfolio and manage the risk tolerance based on your perspective. Fundamental changes are true. Always follow the money. That's what we say when we look at the total fundamental sphere of any type of investing. Or else you will miss out on huge gains, that's for sure, right? And in this century of central bank digital currency, the infrastructure providers and the third-party providers for this digital era are going to be new Google, Amazon, Microsoft, or even bigger names than that. As we already chose the host for this race, and the race has already begun, stay calm and prevent the temptation to take out the profits too early, because it's going to be bigger than we can imagine in this decade itself. Fiat or cash is really becoming a trash, and as it's losing its purchasing power, the inflation is kicking in too much, and economies and stock prices doesn't actually matter. Now they don't even correlate with themselves. So the rich will get richer and the poor will be pushed towards starvation. So just choose which side you want to be. You want to move from a middle class to rich, or from there to poor. So keep your wealth. You have to store it somewhere, and that is in a digital currency era. Digital currencies, private and public. Now this is a research presented by DBS, and this is a long research article. Now in this research article, when we look at them, they gives us all the different types of the background, how things are working in this particular arena, and then they look at different aspects which we need to understand. Kind of it gives us a bit more clarity about our understanding for the entire crypto sphere. Particularly this figure shows us the advanced economies. At the bottom you can see its financial inclusion, and the top its payment safety. Now here in the emerging economies, the bottom it's payment efficiency for cross-border. So that's why when you look at Ripple, the company, they are expanding more into emerging economies. Especially if you look at Asia, you can understand that. Now when we talk about Asia and look at the cryptocurrency exchanges as well, the number of cryptocurrency exchanges in Asia is also increasing. Now if you look forward into the same document, what you can understand is, say, the Central Bank Digital Currency Development Bank of Japan announced it in 2020 July. So all these are kind of showing you how these are changing. Singapore's project Urban, Hong Kong Monetary Authority, and Thailand Central Bank doing the same. So if you look at the same, you will understand, yes, there are advancements, but it's more in Asia. Why? And the reason for that is shown here, because for them it is at the bottom for cross-border payments, And the top, it's payment efficiency for domestic rails. If you remember, Brad Garlinghouse stated previously, we are concentrating on Asian countries like Japan because they have higher friction even in their domestic transfer, money transfer. Then here it's financial stability, whereas here it's financial inclusion. What you have to understand, here it's at the bottom, where here it's at the top. So the payment safety, it's in the top 3 for both the type of economy, and we are moving on to a digital bank era. At the same time, when they're looking at cryptocurrency and cryptocurrency exchanges, we can actually move into, say, page number 20 of this article, and it shows how things are evolving. If you look at China in this one, which is encircled there, the big tech and other fintech credits. So if you look at there, for China, its total fintech credit is huge, and I think going forward we are going to see the same trend all around the world. Fintechs are now becoming banks. They are providing loans, they are providing different services which traditional brick and mortar banks used to provide. Now these brick and mortar banks are being closed around the globe. I just showed you that, right? Australia's big 4 banks removed thousands of ATMs and shut down hundreds of branches as coronavirus crisis pushes nation closer to a cashless society. So when we are nearing a cashless society, even in this article it shows how we used to have third parties in the midway, how we used to take a lot of correspondent banking networks. Now it's just one network. Here shown an example of China's new clearing system. Now as we move further, say this is page number 21, which shows hybrid CBDC approach and public-private partnership. When they talk about that, they actually show you that the intermediaries are one of the key aspects for this, and then they talk about the Bank of England's proof of concept, how they are looking at different payment providers. Now, we already went through the pilot conducted by Bank of England, and we understood that it is something important when it directly has a connection with the private company Ripple there. So that is kind of giving us a clarity about what it looks like in the project. Now, these are different types of initiatives taken by central banks. Say they shows one by one different central banks, how they are thinking about this, going digital, taking out the cash from the economy and all. But they still believe cash has a role to play in the near future, and it would be changing. That is in the phase 1. Now, if you look at the phase 2 here, one is digitization of payments, which is CBDC, central bank digital currency with real-time settlement capabilities. Then the payment queue handling uniform queuing system. So that is the clearing side of that. And then when you come to the bottom, privacy of transactions, only relevant parties will have visibility to transaction details. That is one of the specification of RippleNet. Then finally, settlement finality. Final and irrevocable settlement of payment instructions with deterministic finality. Liquidity optimization, implement netting and gridlock resolution algorithms to maximize liquidity efficiency. So these are in the phase 2, and we can kind of see this is being implemented. So kind of we are into that phase 2. If you look at the phase 3, phase 4, which is to come ahead, and then finally phase 5, we can understand the steps are being laid one by one, step by step. Banks, corporates are entering this space, and that is the way forward for this digital era. When we are looking at the digitization, tokenization in this decade, this is showing CBDC and cryptos, and crypto has the staying power which it won't give away. And this page, which is 27 in this document, if you go through that or read through the lines, what you can understand is the cost of transaction and settlement, improving the speed, security and convenience. If you remember in the last video, we show you a 3-point in the triangle, right? Governance, security and scalability. The fintech which have all of these would stay for large scale money print instead of large scale money printing. This technology will be here. Having been around for more than a decade, private digital currencies or cryptos have moved from domain of marginal individual investors being offered in regulated exchange. Now we understand this is becoming institutional as well. So when the institutional guys are coming in, keep in mind they may manipulate, they will manipulate the market in a way that they are going to make most of the profits. Now just looking at the technical side. Now this is a 12-hour chart and this is a weekly chart and then a 3-day chart of XRP which I have prepared. Now say this 3-day chart, if you remember a couple of videos back when I talked to you guys about the 3-candle reversal pattern where you have that bounce here at the bottom, that is the support, then the neckline here which we crossed and closed above that, it shows us the possibility of a move to the upside towards 67%. Now that we reached and we are just above that resistance line for this particular trend, and if we are able to cross above this, then look forward for a 67% rise on a 3-day chart. Now if we zoom back and look on a weekly chart, we can actually see these kind of stuff which is kind of rare. If you look, it happened like 3 years back, the entire 2018, 2019 and half of 2020, we didn't see this thing, right? The RSI entering on our overbought area on a weekly chart. Now that is all happening when we are breaking the long-term resistance trend line here, which you can see, and that is all cool. Now what you have to look at, this is a Heikin Ashi chart compared to this is a Japanese candlestick, and this again I'll move it into Japanese candle so it's easy. Now here in this Heikin Ashi, one confusion which lays there, considering the disbelief rally, is this: when we are breaking out, there is a possibility that we may go above the moving averages and then just breach it to the downside and then start a pump. So there is a possibility for that too. But when you move on to a weekly chart in a normal candle, a Japanese candle, it doesn't actually much of match there. It is kind of here at this area, it's making that patterns here. But if you look at this area and understand the price fluctuation, can see when it entered here the first time, there was a 2200% price appreciation, and then here 900%, and then here 8300% and around 2000%. So each time it pumped, it went around at least 10x, and then the entire market cycle was different here back in 2014 to 2017. The volume was too low, the number of investors was too low. Here we saw retail FOMO, and now we are looking at institutional and retail FOMO, which is being into a full-scale adoption as well. Banks, financial institutions are going digital, and as we just saw, digital institutions are offering digital services in which they make it digital currencies. Some nations are looking at digital assets, others are looking at digital currencies, cryptocurrencies, regulatory clarity, everything is coming out. Now, keep an eye on the MACD as well here at the bottom, because if you look here, this happened along with the RSI and the price. The MACD was entering into the positive territory, and we can see the same here. So the chances for a full-blown bull run is still present. Now, if you look at this particular asset on a 3-day chart, we saw this, right? If we zoom in and look at it on a 12-hour chart, we can see this particular pattern here. Looking at the MACD instead of the RSI, we have a pattern here forming from the price itself. It went up, it got resisted, it came back down, made a flag-like pattern, and then bounced to the upside. But when you're seeing this huge candle here, with a bullish shaped candle, which is closing above the previous red candle, the MACD was kind of getting ready to cross to the upside, and as the MACD started crossing, the price started pumping, and it pumped like 66%. So this is something which we are talking about here, that 67%, 66%. Now you're getting the same, and the MACD is getting crossed along with the RSI entering into the overbought zone. So a push like 60-70% cannot be a surprise here for those who are looking at this on the real scale. So 0.5 is in the near future. Now that's on a 12-hour time frame, right? If you move on back to a weekly time frame on a Heikin Ashi candle and take out these indicators and look at it, you understand that the RSI is already entering here, the MACD is already there, and then look at this head and shoulder pattern. Take that here, you will reach around 0.7. So the pump towards 0.5 to 0.7 is near to us. Those who accumulated here back in 0.18, 0.16 range would be getting 200-260%. So that's why I'm saying if you have a huge amount invested into XRP, your portfolio will be fluctuating like percentage of profits like 100, 200, 300, 500,000. So don't be tempted in that case. If you are getting tempted and jumping out of this boat early, you're gonna miss huge gains. Now getting back onto the fundamental side of it, this is kind of showing you the technical again, showing the patterns and all, so that we can kind of skip it. But this one shows you that this should be the start of a new full-blown XRP bull run, and that is what we are talking about, right? XRP could surge even higher, is what analysts showing based on the technicals, price and all. But this is happening at a time when Ripple, the company, is being mentioned as the fastest growing private companies in America. Now that's from INC, which is an respectable, reputable institutions forecasting it in this one, and it's on the 123rd. When you come down and look at it, you can see Ripple, the company, on 123 here, and that's actually a cool thing. Because when you are looking at that, they're talking about financial services, and it's in US. So it's financial services with a percentage of 3000% of growth for the company. And when we look at both the technical and fundamental, I kind of agree with David here. He kind of lays this perspective out there, meaning you saw a 2017 bull run, which was just the retail, and what's coming next can even make that one a joke. Now, that's cool, right? Now, when we see the money is moving into this area of fintech and they are funding the fintech, keep in mind, we always follow the money. If you want to make money, you should be looking at huge money being transferred from one area to another. So this amount which is being poured into the fintech funds, understand that there is a change in the entire financial system, and thus they have to invest to stay relevant and to earn more profit in the near future. How the funding will be distributed? So they are looking at different areas of Singapore dollars, and the investing side is moving from one area to another, which is fintech sector. Now we actually saw different research articles, different government documents, which all focuses on fintechs, and they just name what fintech are you on. Like, there are a lot of different types of fintechs available around the world, right? But this all happens at the same time, when a US economy is kind of in the misery, even like they stated, like the US economy is more miserable than both Russia and Mexico. So that's kind of weird. When Nasdaq is hitting highs, people are suffering. So that clears the mind up, like the poor is poor, the rich is rich. That is a difference. And then they talk about financial inclusion. Now, that is a different sort of theory. You can make it up or you can break it down. It's up to you. Now, these poor guys who are unbanked currently, if they enter into the new banking system, new financial service, these institutions, giants, can manipulate them and take out them too. So, that's another area. But looking at this one, Germany proposes new bill for digitized securities, meaning when the new guys are coming in, they are looking at the securities, they are looking at how to make money. Okay, just jump into the stock market, it went up like this, so I'm going to make money, and they are going to loot them too. So this is not a way, right? If you are not financially educated, if you don't know the market cycles, if you can't position yourself well, if your portfolio is not well positioned and the risk tolerance is not understood properly with the time frame you target, then you may be in a risk. Because now it's not just the cryptocurrency market which we are saying about, the entire stock market, the commodities market, everyone is looking at digital currencies, the cryptocurrency market, and we can see that the cryptocurrency market is fluctuating positively. If you look at the return rates, XRP, yes, in last 7 days it managed to reach around similar to that of Ether. When you look at the price, Ether went up 1.2% on a 24 hours and XRP went 8.3%. Now, when you look at it on a weekly, it's kind of similar. On a 30-day, yes, there is a significant difference. In a quarter, there is significant difference. The way real investors look at it is like, okay, this asset hasn't appreciated in price well, so the chances for this to go here is like into 10, right? Into 10%. So if Ether is reaching $500-600 in price, XRP should be reaching 10 times. That is a possibility. Now, looking at the fundamentals, it looks strong possibility that it is going to happen soon. Bank of England Governor Andrew Bailey on the future of cryptocurrencies. So this is the article which we went through, and we understand they are kind of clearly stating all of this is happening. The demand for digital transactions are high, the surge in demand for the crypto is huge. They clearly show that here in this article. And the direction which they give this to the institutions. Now these research articles are not for retail guys like us. They intend this for huge guys, the giants in the market, right? So when they are looking at this, they are analyzing this, they understand this is the future, and that is where they are gonna divert their funds towards. The investments which they make will not be for next 6 months, next 2 years, 3 years. They would be looking for 5 years, 10 years, long term gain. So if you understand this market, stay relevant, stay focused, and stay put. So that's all for today, guys. If you saw value in the content, do support the channel, hit that like button. If you are new here, please do hit that subscribe button. If you would like to extend your support, you can support the channel via the Patreon or PayPal link given in the description below. I'll meet you guys on the next video. Bye for now.